Governor, thank you very much for joining us on Bloomberg Television.
Thank you.
You've been doing monetary policy for 25 years now. We have this election at the moment. Just give us a little bit of context how significant this election is in comparison to others you've seen over the years.
The election is significant for us and for the markets because it is happening after the conference of Paris said, and there is hope from the market that a majority will be formed to implement the resolution of the Paris conference. Also, it is important because it is showing that Lebanon remains a democratic country.
The United States has called on Lebanon to cut off Hezbollah from the financial system. Sanctions have been placed on select entities recently. How is the banking sector dealing with those sanctions in Lebanon?
The central bank has issued the proper circulars, and therefore Lebanon is can cope with the sanctions, whether they exist already or they are voted later, because there are talks of other laws. So we are confident that our banking sector is well managed, compliance-wise has made big progress and can remain integrated in the international financial world.
There is an agreement among investors and lenders alike that the current status quo is not sustainable in terms of policies. How quickly can you push through deeper economic reforms, structural reforms that are needed to really change the system and really save it in the longer term?
As you mentioned, reforms are needed, they are necessary, and the central bank has been advising the government to do these reforms. They have to put the principles of the reform. But in the conference of Paris, the government has committed to bring down the deficit compared to GDP by 5% in 5 years.
Remittances from abroad, they're really critical to the Lebanese economy. What is it, 15% of GDP? What's your read on the pulse for deposit growth at the moment?
The deposit growth have been, for the first quarter, 1.5%, which means annualized they are running at 6%. Which is for us a positive element, as the growth in these deposits is sufficient to fund the public and the private sector. The Eurobond market, which has seen higher yields in the secondary market, is in fact undervalued today, and the government don't intend to make new issues to the market. They made an issue for the central bank, and our intention is not to sell more than $2 billion of Eurobond in the next 12 months.
The financial engineering has been described by some of the people I've been speaking to as creative and exotic and innovative in terms of approaching with a solution to a problem, in terms of a short-term solution. But there's also been a view that it might undermine the stability of the peg. What are your thoughts on that?
We are committed to a stable peg. The financial engineering that we have launched in 2016 and the financial operations that we did in 2017 have strengthened the dollar assets of the central bank, and therefore give more confidence as to our means and our resolution to keep the Lebanese pound stable.
Closing question on what that means for asset allocation. Are you diversifying more into gold then, if it is a more turbulent time at the moment, both in global markets and in regional politics?
Well, Lebanon, as you know, is the second holder of gold in the Middle East.
You can never have enough.
But we have been since more than 1 year playing the floating rate notes in our investments. And we have also a local market that provides us with revenues that are enough to keep the central bank profitable and not to have to take large risks abroad.
So that is a no to more gold?
We will not buy more gold, but of course we will not sell the stocks that we have.